Hello, everybody. My name is Paul Buitink, and welcome to another Reinvent Money episode. I'm excited because today I have Jeff Snider on again from Alhambra Investments. Hi, Jeff. How are you?
Hi, Paul. How you doing?
Yeah, not too bad. Lots of things going on in the markets at the moment. Crypto crashing, inflation still high. A lot of things we could potentially discuss. But I've picked another topic for today because I really want to understand, and I think my audience or our audience too, how these sanctions on Russia exactly work and how Russia is still able to use the international financial system. I think it's important to understand the mechanics behind that, because we see on the one hand a lot of sanctions. On the other hand, we still see the ruble gaining in strength, and we also see Russia still paying in dollars and European companies still paying in euros or rubles. I want you to shed some light on this topic so we can better understand how that works, and if Russia, for example, can still make use of the eurodollar system, all of these things. Let's discuss that today.
Yeah, it's amazing, isn't it? Because initially everybody said, hey, they're going to shut Russia. We're going to cut them completely off of the global financial system. They're going to be political pariah. They're going to be in economic isolation. They're going to be a monetary basket case, all this stuff. And as you mentioned, the ruble is as high as it's been in years. Recently, it's backed off the last couple of days, but I mean, it got up to about 65 to the dollar, which Russia hadn't seen since the days before the COVID pandemic. So obviously we're missing something here.
Yeah, and let's start close to home for me. I'm living in the Netherlands, so we depend quite a bit on Russian gas, and other European countries are in the same predicament. So we have this thing going on now here in Europe where European energy buyers, they cannot, they have contracts with Gazprom and Gazprom entities in euros. And they're not supposed to pay in rubles because of the sanctions, but Russia, they demand rubles, because Putin at the end of March said, we want the payments to be in rubles from now on. So they came up with this trick whereby European energy companies would pay in euros to a Gazprom bank account, and then it would be converted to rubles, and those rubles would be sent to Gazprom, and then everybody would be happy. The European buyers have complied to their Europe contracts, and Russia gets rubles. So supposedly everybody's happy. But how does that work technically within the financial system? Because Gazprom Bank is still a European bank with access to Target 2, if I understand correctly.
Well, it doesn't necessarily have to be a European bank, but I mean, essentially what's happening is the bank is willing to take on the currency risk of doing the transaction. Basically, all you're doing is European energy buyers from Russia is you're taking on essentially, or you're transferring currency risk by employing a middleman. You're employing the eurodollar system to transform euros into rubles somewhere in between what used to be a very simple payment. That's kind of what the eurodollar system does. There's banks who are willing all throughout the world who are willing to take on these kinds of risks for a small fee, maybe a large fee, essentially to transact, to allow companies and countries to transact in whatever way they need to. That's the thing about the global banking system, is that it can be extremely flexible, even in some of the more extreme conditions like this, where governments are applying sanctions or trying to apply sanctions to their own local jurisdictions, which, I mean, because it's an offshore system, it gives the banking system somewhat of an edge on local authorities, because they can move things around, they can transact in different ways all across the world, different spectrum, different currencies, different types of financial arrangements. I mean, there's a whole menu of options available to global banks that you just can't say, we're going to end Russia, we're going to stop this. Or from the Russian perspective, they can't really demand direct payment in rubles. First of all, nobody has rubles, so they're already going to be applying to the banking system anyway to get them somehow, which again, that's sort of the point here. The banking system is uniquely set up. This offshore system is uniquely set up to meet these kinds of demands. And so as the sanctions were applied a couple months ago, bankers started working late hours, a lot of phone calls back and forth, couldn't use SWIFT. Some of them couldn't anyway. So they started, you know, the old technological, you pick up the phone, send a fax, whatever. And sure enough, these payments are being processed.
But then for me to understand with balance sheets, so we know, for example, that Gazprom Bank has said that European gas companies would need to open a K account there, a ruble account, and they would also have need to have a euro account. So the European gas buyer, they would send euros then to Gazprom Bank to their euro account, and then it would be converted to ruble. So they are sending actual euros from Bank A, let's say ING Bank, to Gazprom Bank, right?
Yeah, well, I mean, that's the way it is now. And in the future, it wouldn't matter if they're sending it directly to Gazprom. You can just stick somebody else in between. So the European gas suppliers, depending on contracts and whatnot, I mean, contracts can be amended anyway. But essentially, all you need to do is find a middleman. So instead of sending a euro-denominated payment directly to Gazprom Bank, find a bank in the Middle East that'll, in the UAE, for example, it'll transact with Russia and rubles. And so you have a bank that, for a small fee, will be willing to take on the currency risk and the geopolitical risk of undertaking the transaction. Right. It's a little more paperwork. It's a little more friction. It's a little less fluid and dynamic, but it still gets done. It's just a matter of finding the right counterparties and the right price at which they're willing to do so. And again, I think that's one of the reasons, along with capital controls on the Russian side, why the ruble has become so strong, is I think what we're seeing is that there are financial entities around the world who are more than willing to be that kind of eurodollar system or global offshore banking system middleman, and they're taking their price for it.
So they're non-sanctioned middlemen are willing to take the risk by getting a cut, of course, and then providing Russia and Russian entities with the liquidity they need.
Yeah, and it's fun. I mean, that's really what the eurodollar system was. It's long chain. Well, it was initially described as long chains of interbank liabilities, which means as an American, I transact with a bank outside the USA in London, who transacts with a bank in Switzerland, who transacts with a bank in, say, the Middle East or Africa or whatever. You find these ad hoc networks. They're actually called corridors in the SWIFT system, where banks simply find ways to transact with each other to move payments around in whatever fashion necessary. And every time the transaction takes place, a bank adds their own specialty to it. So if there's some kind of transformation where you're looking for example, an interest rate swap, you want to swap fixed for floating, somebody can do that. In this case, you've got euros going to rubles. You just need somebody willing to undertake the ruble side of the transaction, which I think there's probably a lot, because some of the, as the Russians have described them, quote unquote, friendly countries that are already willing to pay in rubles, they're going to have rubles on their hands anyway. They're going to transact in rubles with Russia in a more bilateral arrangement. So maybe they're willing to lend some of the rubles to these other middlemen who are now transacting with banks in Europe or gas buyers in Europe. So what develops is the ad hoc ruble trade.
And when you say eurodollar, could it also be a euro, so an offshore euro market? Yeah.
Yeah, when we say eurodollar, I'm using that as a sort of a catch-all term. It's a generic term rather than specifically offshore U.S. dollar. Eurodollar really is offshore global banking, right, in whatever currency is required by the customers.
Yeah, and the policy think tank Bruegel, they're based in Brussels. They interpreted the setup as follows. They say, well, probably Gazprom Bank, which is still part of Target 2, will receive those euros, but they cannot do much with these euros. They will accumulate these euros and will obtain rubles from the Russian central bank in forms of a loan, basically, and then
they can the euros as collateral.
Yeah, but so if I understand correctly, then these euros are still being accumulated by Gazprom Bank in the euro system and the Target 2 system, which means they're still vulnerable for further freezing of those assets in the future. So I don't understand how Russia is gaining by asking for rubles if they're creating these rubles themselves and the collateral, the euros, are stuck in the euro system.
Yeah, and I think that's one of the, it's not really about payments at that point. It's about freezing accounts. It's about actual confiscation, those types of more extreme measures, which, I mean, there's a double-edged sword to that. And I think Russia is counting on the Europeans kind of walking softly here, trying to talk tough, but not actually going forward with something like confiscation, because that just simply breaks down trust and trade beyond strictly European versus Russians. It becomes a whole bigger issue with China, becomes a whole bigger issue with countries across the Middle East as well as Switzerland's, at least its stated business model, which is try to not interfere in these, and especially in terms of confiscation and really going after certain assets. But you're right. I mean, the bigger problem is that the Russians are going to accumulate euros that they can't immediately use. But that doesn't mean that, again, banks aren't willing to say, I'll step in the middle here. So you have euros, lend them to me, I'll use them, and I'll find a way to get you some rubles. And then we'll just transact in that way, where you have an indirect relationship, which is less efficient. There's more, it's more of a drag on, and obviously a higher cost if you have dealers that are extracting fees and doing these transformations, but it can be done and it will be done. And I think that's why, again, the ruble is rising, or it got to the level it has, is because it is being done. And it's not just a matter of payments for gas supplies. You also got to remember, Russia has a pretty sizable external debt, which again, they found ways to manage their pay. They haven't defaulted on their euro bonds, even though they're denominated in dollars and euros. They've found ways to get it done because the global banking system, its entire business model is to do that, to figure out ways to get these things done because things need to get done.
And that has been your point, of course, for some time now, that we live in a global private bank monetary system. So governments can decide whatever they want to decide, but it's so decentralized. There's so many banks and parties involved that there's always a route to find for any company or country to transact with.
Yeah, you know, it's interesting with the Eurobond. If you want to talk about that for a second, I think that's an interesting example of what we're talking about here. First, there was a couple Eurobonds that were sort of straddling the line between triggering a technical default, where they were supposed to be delivering dollars, but as you said, the Russians say, no, we're going to pay you in rubles. These interest payments on the two particular Eurobonds, that the interest was coming due earlier this month, or actually last month, with a grace period that lasted to, I think it was May 4th. And the Russians said, no, we're going to pay you in rubles. We've already paid rubles to certain bondholders, and again, quote unquote, friendly countries. So you're going to accept rubles, whether you like it or not. And then, of course, you had ISDA get involved, saying if you pay in rubles, this will trigger a credit default swap event, or a default event that'll trigger credit default swap counterparties. And then all of a sudden, out of nowhere, just I think hours before the grace period ended and the default would have been triggered, Russia said, we've got dollars. Not only do we have dollars, they used the payment system, I think it was Bank of New York Mellon in London, to actually disperse US dollar payments to these Eurobond holders at the last possible minute to get it done, which shows that not only do we have, you know, geopolitical gamesmanship on the one side, it also extends to the other side too. But at the end of the day, the interest payments got done because it's in everybody's best interest, including Russia and everybody else, to get it done too. And then we have this is going to repeat because there's Eurobond payments that are coming due, both one denominated in dollars and one denominated in euros at the end of this month, which might be a little more tricky still, but yet Russia has any number of options, including paying in banks in the UK, in Switzerland, and I can't remember the other place. It was someplace in Asia, I think. But, you know, the point being that even the Eurobond, which are, you know, nothing more than corporate bond or sovereign bonds placed outside of the issuing country, even these bonds have embedded within them covenants that allow a great deal of flexibility in handling all sorts of adverse scenarios, including sanctions, because the Russians have been thinking about sanctions and how they might avoid them for a very, 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 very long time. And even in the Eurobond scenario, because the US Treasury Department has said for particularly US persons, after May 25th, you are not allowed to receive any sort of interest payment from any Russian entity, which simply involves you selling your Eurobond to somebody else who can. So things just move around as necessary. Again, it creates a little bit more friction. It creates a little bit more of a drag and more work and more of a headache for the bankers, investors involved, but it still can get done.
Yeah, but what I still don't get then is that Lavrov said in a speech that he chose this mechanism of being paid in rubles because he wants to avoid the confiscation risk if he would be paid in euros. But then these euros are still the euros that the European gas buyers pay to Goscon Bank are stuck in the target 2 euro system, so Russia can't access them, and there is a risk that it will be then frozen and confiscated and also used, because there's already some European politicians saying that we need to use the frozen Russian reserves to help rebuild Ukraine, for example. So I don't see how Russia is gaining from this scheme if they are still amassing euro reserves that they cannot use and which can be completely wiped out from their balance sheet by Europe if Europe wants to. Of course, Europe can't do that because then Russia will probably stop supplying gas. So there's an interdependency.
Yeah, there it is, right? That's the thing. It's sort of a mutually assured destruction scenario. You take our euros, we cut off the gas supply.
Yeah.
And so I think what Russia is betting on, two things. Russia is betting on that Europe won't go that far because if they do, Russia will say, we're not sending you gas at all. So as long as we're going to play this sort of, dance, we're going to dance to these geopolitical tunes and we're going to make all sorts of loud noises for the public's benefit. Yeah, we'll continue to go along as they are. But if you get into real actual confiscation confiscation of these euros, forget about it. And I think Russia can use those euros in other ways as collateral to other banks saying, let's transact in other currencies. So I think they do, but that's transferring the risk to the bank that's willing to bet on this mutually assured destruction scenario. But I also think, look, what Russia is really doing isn't necessarily trying to rebuild a ruble-based payment system. They're trying to diminish their amount of dollars or euros or any other outside currency that they might need to transact, which, I mean, in one sense, the sanctions and the economic destruction across Russia has already done that for them. I mean, transactions and global trade into and out of Russia outside of energy has really been curtailed anyway. So their need for external currency has fallen off for all the worst reasons. But you can understand why the Russians would say, let's reduce our exposure to the global monetary system for all these various reasons. And let's just where we can, like China has been doing, let's engage in bilateral ruble-based payment arrangements. Let's see who's willing. Let's play a game of chicken with some of these Eurobond holders and see if they'll accept rubles. Because why not? Let's figure out where there are areas where we can exploit and use and see who will accept our local currency, because that lowers or diminishes or reduces the level of external currency that puts Russia at any sort of risk of, it's not getting cut off of the payment system, but confiscation, or just, as you said, we're going to take all of your euro resources and transfer them to Ukraine or something like that. So the Russians are playing a very, it's a geopolitical game that, the banking system is going to find a way to get done either way.
And of course, since 2014, when they took the Crimea, they've already started reducing their dollar holdings and also other forex holdings in India of gold in order to diversify away, because they already knew well in advance that they would probably at some point start with a military campaign. And for that reason, they've already had started reducing their forex, especially with the
Paul,
dollar.
you could see that actually in December of 2021, just a couple months ago, before the Ukraine invasion. The Russians moved. You just look in their IMF holding. They moved a ton of cash around to various different places. Which, I mean, we don't have the granular detail about which went where, but you can see from the IMF holdings that obviously Putin was getting ready for this type of scenario, because he pulled a lot of reserves out of securities and put it into some form of deposit type of account with likely friendly central banks. I doubt it was with the BIS. I doubt it was with the IMF, because that's how it's labeled. It's labeled other foreign central banks, BIS or IMF. I'll bet it was with central banks around the world that are willing to look at Russia very differently than the sanctions and how the West is. So the Russians were making moves in anticipation of all these things to begin with, and now they're continuing to make moves, trying to see where they can get away with what they can get away with, which is, ruble-based payments here. Let's see how far we can go before we trigger a technical default in the Eurobond market. Let's see which banks are opening to helping us out with these middleman transactions, all this kind of stuff.
And do you think they're also using the Chinese central bank then as one of the most important central banks?
It's possible. I mean, obviously, we'll never know, because neither the Chinese central bank nor the Russian central bank nor any reporting will be made available to the public. But I think it's a reasonable guess, don't you? I mean, the Chinese are heavily invested in Russia in several different ways, politically as well. And so you can imagine where if the Russian central bank said, hey, Can you help us out here by being a middleman for us? You know, hold some of our reserve deposit accounts in a Nostro Nostro account. I think the PBOC would do so.
So it could well be that Bruegel is wrong, and that Goscon Bank, for example, is sending those reserves that they have accumulated to a Chinese bank in the Target 2 system, and that they keep those euros for Gazprom Bank at the European Central Bank.
It's possible, or maybe, you know, the United Arab Emirates, or even India, because again, friendly countries, close trading partners, transacting in energy already. They do a lot of cross-border transactions between those two countries. How hard would it really be for the Bank of Russia to set up a swap arrangement with, say, the Reserve Bank of India, in rubles as well as rupees? And then all it would be for the Central Bank of the Reserve Bank of India to figure out a way to loosen up the transaction, or loosen up the restrictions, so that they can get access, if not as collateral, some other kind of claim on Russian euros, wherever they happen to be.
Yeah, and in the Washington Post, I read that there's hardly an official market for rubles at the moment, and we cannot really rely on the ruble exchange rate, for example, in dollars. So the strength that we see may also be fake and completely manipulated by the Russian central bank. Do you agree? Or if I understand you correctly, there is a big market for ruble at the moment. So
no, there is no big market for ruble. That's because ruble is not really a currency that most people around the world outside of Russia want to transact with. But it's funny how they make that statement when they weren't probably making that statement when the ruble was crashing in early March. So when the ruble was crashing, it's like everything is all right. You know, the market's working the way it is supposed to be. Now that the ruble is really strong, it's, oh no, forget about that. You can't trust the currency translation because it doesn't make our argument look very good. You know, I don't buy that at all. I think on the one part, yes, the reason the Russians transact in the global currency like the eurodollar system is because obviously nobody wants to transact in rubles unless you have a direct relationship with Russia or you have a direct need to do so. So there is not a robust market for rubles, but yet it's been the same small market for rubles today as it's been forever. So that's not really something that has changed. What has changed is that since these sanctions were unleashed, since the idea that we're cutting Russia off from the global financial system was given to the public, lots of stuff has been happening behind the scenes, under the surface, in the shadows, where banks are doing some things, central banks are doing other things, the Russians are doing things. And what's happened is the system is evolving to the current circumstances so that things can get done. Not the same ways they used to be done before. As we said, there's more frictions now, there's more cost to doing things, there's a greater amount of work involved in getting things done, but I would say it's getting done to some extent. And so Russia's problem is not really the payment system so much as I think the economic consequences of what's going on, because that's a whole separate issue, as well as some more future geopolitical issues, which again, the very fact that Russia wasn't willing to risk a technical default on its Eurobond payments says that they're looking to a day when they're going to go back to the Eurobond market. They're thinking ahead, saying, we want to still be connected to the global financial system, so we're not ready yet to pull the trigger and actually default on our debt obligations, because we know how that happens. I mean, the Russian Eurobonds are a relatively new phenomenon because after their defaults in the 90s, they had been shut out of international finance for a very, 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 very long time. And so the fact that they were willing to pay and magically these dollars appeared at the last minute shows that, you know, at the end of the day, even the Russians are thinking ahead longer term, where they're not going to be shut out from the system forever, that things are actually going to go back to some semblance of normality.
Yeah, and they're currently still running a big trade surplus. How are they investing those savings at the moment? Because they cannot access, of course, the dollar, the formal dollar system, so they cannot easily, I guess, hold treasuries anymore at the Federal Reserve, or they are also shut off the euro system. So what do they do, and what kind of currency do they keep their savings at the moment that they accumulate?
Well, yeah, they haven't been holding treasuries since 2014. So or actually 2018, sorry. When the last time they went through the issue there, dollar shortage in 2018, they got rid of most of their treasuries, diversified into other kinds of securities, which you don't really know what they are, but Russian transacting with India in rubles, maybe they're buying Indian bonds. Russian transacting with China, maybe they're buying Chinese bonds, which I would bet heavily that's probably where they're going, either in some form of deposit accounts with the China Import-Export Bank, maybe the PBOC more directly, but I doubt it. Most likely the large state-owned behemoths. But any number of things that they could be doing with their reserves that they're accumulating from selling resources or selling their natural resources on the global marketplace, because they're, again, that's the system. The financial system is set up to give you whatever you really need. If you need some form of reserve payment as well as store of value, the banking system is going to be able to give it to you because it has access to pretty much anything, anywhere, at any time.
Right, and SWIFT is also not that important then, I guess. I mean, SWIFT is a messaging system that allows for easier payments, but it's without that system, they can still use other means of messaging like email, Oracle, or whatever in order to get the payment done.
Yeah. SWIFT is important. I mean, the reason it's gotten as ubiquitous as it had is because it makes global payments very simple, easy, instantaneous electronic transaction information that is standard formatted. It's ready to go. It's automated. It makes life very simple and easy. So if you get cut off from SWIFT, again, your bankers are going to have to work a little harder. You know, the messages may not be standardized. You're right. Maybe you have to send an email. Maybe you have to make a phone call. But there are different ways of doing it because SWIFT is really nothing more than a message system overlaid what is this correspondent network of, you know, global banks talking to each other and transacting with each other and having relationships that go back decades, if not in some cases, maybe even centuries. If you're talking about Russian banks with, say, Swiss banks, for example, they probably have deep relationships that go way, 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 way back. And so if you take away SWIFT, they just have to have some other way of communicating, which, again, going back to our central thesis here, we have to believe that's going on because of the situation as it is. The Russians are doing what they're doing, and it's getting whatever's going on is getting done.
You also mentioned chips every now and then as being a very important language or system or tool to use in the eurodollar system. What is the difference then between chips and SWIFT, for example?
Well, chips is actually a settlement system, where SWIFT is essentially just a messaging system. Those messages have to be settled eventually, whether it's in a bilateral arrangement or some form of, if it's a high dollar payment, this is probably going to be through these real-time gross settlement systems like chips, or if it's in sterling, it's called chaps. Whatever, there's various offshore mechanisms, or actually onshore mechanisms to handle offshore initiated transactions and payments. So, you know, chips is essentially just a way like FedWire for managing various different payments being processed all throughout the day. Usually the more high volume, high value transactions, which goes through, again, essentially a bank-centered system, because you have 43 sponsoring banks that then handle transactions or responsible for transactions for hundreds and hundreds of other banks around the world. So essentially, it has its own messaging system, which does allow for SWIFT compatibility. So SWIFT messages can go through chips and get settled that way, which means, though, if you're cut off from chips, cut off from SWIFT, you're not really cut off from chips. You can still do high volume, high dollar settlements, in addition to any sort of bilateral correspondent relationships that you have with individual banks around the world. And I'm not sure how much Russia does on chips to begin with, but their banks are all there. I think there's 67 of them that are unique, have UIDs on chips, including all the sanctioned banks, which means theoretically they could be transacting through chips, and we really wouldn't know.
Yeah, and then you have the local systems, like in Russia, they have the SPFS system for transfer of financial messages, and China's SIPS. Different from chips. Yeah, so it's all very confusing, but it's a cross-border interbank payment system. So of course, these countries are trying to set up their own messaging or payment systems in order to be less dependent on the West and their sanctions. Are these two systems that I just mentioned getting any traction, as far as you know?
I don't think anything has changed since the March, since all the sanctions showed up in March 2022. But I mean, do you really trust the transaction data the Chinese government puts out or the Russian government puts out? I'm not sure I would actually put too much stock in that. I don't really think that anything, again, I don't think anything has really changed so far as these payment systems, except that they might be more of a tool, or more of a propaganda tool than anything else. Say, look, you know, we can still get things done. Your sanctions aren't really impacting our ability to at least transact across the global payment network, because we have all sorts of different workarounds, including, as we'll threaten publicly, we'll stop using the dollar system and start using the Chinese system, which isn't really true, but it makes for a very good soundbite.
Yeah. Final question. We have, of course, all read Zoltan Pozsar's piece about Bretton Woods 3. You've also discussed it on in the Eurodollar University. At the same time, we do see Russia looking for ways to be less dependent on the West, on the euro, on the dollar. Do you expect countries like Russia, but also China, perhaps, and other countries to be buying more commodities as part of their reserves compared to the past?
No, not at all. And I think Bretton Woods 3 is off to a really terrible start, because part of it was that over time, I know Zoltan said over time, people are going to be, countries around the world, companies around the world are going to be ditching the dollar. And so we need to be short the dollar, short treasuries, all this stuff, inflation, commodities forever. And at least in the short run, the dollar's way up. Commodities are starting to go down, especially some of the big high flyers like aluminum, even copper, some of the other ones. So as far as some nascent development, again, it's only short run, but as far as any nascent move toward a commodity-based system replacing the Eurodollar system, it's not off to a very good start. And as we said on the podcast with my co-host, Emil Kalinowski, we don't put much stock into this to begin with, because I think there's this whole idea of Bretton Woods 3 betrays a serious, gross misunderstanding of how the actual system works to begin with. And it's sort of in my mind, an absurd and ridiculous proposal, because commodity-based money, commodity-based anything is only going to be a huge problem. In terms of all the stuff we're talking about, imagine if Europe had to settle with Russia in physical shipment of actual commodities. So Russia ships gas to Europe, and then Europe has to pay in nickel or iron or something. I mean, copper. There's a reason why the world went in the other direction.
Yeah, but at the same time, we did see Russia buying gold since 2014 and ditching the dollar because of concerns they had.
And they stopped buying gold in March of 2020 when it became clear that that was a mistake. They stopped buying gold because they realized in the liquidity crisis of March 2020, gold was actually useless. They couldn't mobilize gold in any size because gold is an incredibly illiquid asset, which is an example of why Bretton Woods 3 as an idea is itself ridiculous, because it is illiquid. So during times when you need liquidity, as sad as it is for me to say, because I'm a big fan of gold, I love the classical gold standard, but in today's modern era where it's been demonetized, it's an illiquid asset. And so maybe it's a good store of value, but it is crap for a payment system.
Well, your reserve frozen is even more illiquid. If you have billions of reserves frozen, it's also demonetized and illiquid.
Maybe that's illiquid, but guess what? They're finding ways around it, because the liquidity isn't the actual account or format of the account, it's the banking system itself. So that's where the liquidity comes from. And when you're buying gold, you're quite intentionally moving yourself outside of that system, which again, there's positives and negatives to do that. The big negative is once you're on the outside, it's very hard to get back in, especially when you need to get back in. And as I said before, the Russians are making it very clear they want to stay in by transacting, by making sure these Eurobonds didn't default. They realize that the global benefits of staying in the system outweigh any cost of trying to move outside of it. So,
but they're also pissed off that 600 billion is frozen and that they cannot access 600 billion in reserves made illiquid by us freezing it. So, yeah, maybe that's just theater from their side, that they expect that to come back at some point and to be made available again. But that's if things escalate more, I can imagine that certain countries would prefer having a bit more reserves in actual tangible assets than having more reserves that can easily be frozen by other countries.
Yeah, but it doesn't do you any good if you have a reserve asset that you can't use. Whether it's a physical reserve or not, at least with the system as it is, holding reserves at Goscon Bank in Europe, there's at least you can use those for the time being. If it gets to the point where the European government or the American government or whoever says we're going to confiscate those assets, It wouldn't matter what it was, what format it was. It wouldn't matter if it was gold or not, because Russia isn't holding all of its gold in Russia. So even physical gold can be confiscated as well, as Americans know well, at least they used to know well from their experience in the 1930s.
Yeah, well, interesting discussion. Let's hope at least that things will not escalate and things will move in the right direction, and hopefully at some point it's the war will be ended. And
maybe that's the
go back to
positive
normal.
takeaway here. That I think for now everybody's talking tough, but yet nobody's willing to really pull the trigger, because I think maybe both sides are thinking ahead to say, this will all blow over. I mean, yes, it's terrible. It's tragic. It never should have happened, but maybe there's a future on the other side of this where the Russians are thinking we all kind of get back together again and sort of figure our way moving forward, that we don't just blow everything up and we don't just go to the nuclear option, figuratively as well as literally, in finance as well as in the real world. And that maybe there is a future that we, the things start to get back together, maybe never the same as before, but maybe, the Russians are thinking ahead, the Europeans are thinking ahead, thinking, let's not go too far here. Yeah.
Well, let's hope so. Thanks a lot, Jeff, for this interesting conversation. People can find you on Twitter, right? That's the place where you're very active. I advise everyone to follow Jeff and learn from him, because he knows an awful lot about how the system actually works. So thanks again, Jeff.
Well, thanks for having me, Paul. It was good to see you again.
Thanks. Bye.